The S&P 500, despite everything that can be thrown at it from around the world, keeps on climbing, making newer and newer highs constantly. And of course the talk will be, is there a correction coming? I'm going to look in today's chart of the day at the technical analysis to see where the price might be heading next. Hello, I'm Stephen Hope, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. Firstly, let's dig into a bit of S&P 500 sentiment. I really love using the VIX, the volatility index, to gauge, the direction of the underlying S&P 500. And what you're looking at here, actually, the top two boxes are the S&P 500. The bottom two are the NASDAQ 100. When the lines go from red to green, it's bullish, and vice versa. On the left hand side we've got the daily charts, on the right hand side we've got 3-hour charts, so for more immediate shorter term type trades. And if we focus in on the S&P 500, or the VIX at the top there, we've got a green daily and a red 3-hour. Now to me that says it's a neutral setup. I'm looking for both to be green, i.e. bullish. Why you're seeing them coming down is because the VIX is inversely correlated to the S&P 500. I've got a lot of other videos and content out there you can find on the channel if you want to learn more, but for here at the moment the S&P 500 in longer term is, you can see, is bullish, but shorter term bit more neutral in terms of the volatility, even bearish. In contrast, NASDAQ 100 below that, currently both bullish. So if you're going to pick one of the two to trade to the upside, maybe the NASDAQ 100 is the one, but the S&P at the moment in the shorter term, I say a bit more bearish. So on the weekly line chart for the S&P 500, I'm actually using the continuous front month contract on the futures exchange for the CME there, the S&P mini, and we can see about 5 years plus worth of data, and we can see a lovely continuous growth, one direction in terms of the index up to recent highs, 600s. But I've also put on there, as you see, three of the recent biggest pullbacks in the price. We had 11% down in 2018, 20% 2019, and in 2020 we had the biggest one for a while, over 33% pullback. We've had nothing yet really significant in 21. Whether that happens or not, hard to say, especially as we're coming into the Christmas period when it's normally bullish anyway. But I have just put on to the right of the price scale there what a 30% pullback would look like, and it takes you down to the 3,200s, that 50% Fibonacci line. If we had other size pullbacks in relation to those Fibonacci's, then 78.6 is at 4,000, 61.8, which could be more realistic because there's also some noise in late 2020 around that sort of price level, which is $3,500, $3,600. If it remains bullish though, then we're talking and we're mentioning the 5,000s, 5,400, 5,800, the next up run. But it's been bullish for a long time, prone to the odd pullback and correction before continuing. We haven't had it yet, and we've now got some numbers levels to watch out for, but at the moment currently bullish. What's the daily high Kanashi giving us? Well, in terms of signals, both still bullish, the bottom two lines there. And then volatility pulling back quiet under its moving average, that's the third line from the bottom there. Volume nothing significant, trading under its longer term average. And then on top of the price, I've gone back to March of 2020 when we had that last big sell-off and before it accelerated up again to start my two standard deviation regression bands. That's the salmon pink and the light blue bands there around the price, and we can see that the price does behave within those bands almost all of the time, or it just peaks through the bottom or top, it then reverses back in the other direction. And at the moment we've got a buy signal around our two pink line box breakout set up, price heading towards the mean of that two standard deviation band. So there is still some upside potential there into the, we call it 5,000 area, and downsides, there's some as well, 400-500, and overall though still looking bullish. So for some faster price action, we go to the Renko chart. I've used a $10 block size for the setup here. Signals at the bottom, both bullish in terms of the RSI and stochastics, and the regression as well, also holding bullish. So everything looking positive there. Price still above the longer term moving average. We had a buy breakout from those two pink lines box set up in October time, where it's now drawing up towards highs, and really it's still looking extremely positive. There is potential for a big pullback, maybe to the top of those boxes, 400 sort of zone. And putting on some Fibonacci's based on the more recent October uptrend, then in the shorter term to the upside, 4,700, 4,800 could be very possible. Pullback to key Fibonacci number 61.8%, just under 4,500, and then the 38.2 around 4,400. So there could be some shorter term targets for you, but currently the Renko setup very bullish, but maybe possibly starting to feel a bit overbought, overextended. But again, can't argue with the technicals, still bullish. Now I would have gone full on bullish for the S&P 500, but there's one key factor for me, and that's the VIX. The short term was bearish, so I've just downgraded it to weak bullish overall. It's still looking very strong, Renko and Heikin Ashi, but I'm going to time in with, like I say, that VIX indicator that I use. And if we're focusing on the targets, upside 1.3 and 2 to 1, and downsides very similar but just slightly better at 1.3 and 2.33 to 1. But like I said, overall weak bullish, verging on bullish, so I'd use the indicators and tools that you have to time your way into the trade rather than just going straight on in. So the S&P 500 still very bullish, but beware the potential for a pullback, a sell-off. And my tip would be to use the technical analysis tools at your disposal to time your way into any long or short trade, and use that for your timing. Love to hear your opinions in the comments below, where you think the price of the S&P 500 is going to go next, or whether you agree or disagree with the analysis in this video. Like I say, let me know in those comments. If you want to learn more about the content on the technical analysis that I've used in this video, then I'll put a link in the description below for you to follow. And if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I will be producing just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.